Hi and welcome to another edition of TraderCast's Daily Market Report. First things first, we are looking at the economic calendar for next week. The most important days are centered around Thursday, 12 o'clock Bank of England interest rate decision, 12:45 ECB interest rate decision, and 13:30, 1:30 GMT ECB monetary policy statement and a press conference. So if you're trading euro dollar and obviously cable, these events are very important for you. The other major event is going to be on Friday, which is at 1:30 GMT, which is non-farm payroll and US unemployment rate. Actually, I'll just remove this to one side for now and go straight from charts all the way up to a community. I'll talk about a number of things very, very quickly. Let me just go and find, here we go. Oh, no, sorry. We'll do the next one. Okay, let's start with euro dollar, guys. Euro dollar had a fairly significant sell-off last week. We lost a major support area around 1280, 1300 zone. The current point of control zone is at 1215, 1225. The price action rallying into that sell zone or a point of control zone could potentially spike higher towards 1238, 1240. Only a successful and a confirmed breakout above 1240 could potentially target 1280 and 1300 again. All of these zones would probably be seen as a good shorting opportunities by anybody who is sitting in a bearish camp. The other alternative is a rally into this zone and then sell-off would potentially continue with the current trend towards 1180 support. A loss of 1180 support could potentially target 1140 or even 111. If you're trading cable was acting quite nicely last week, trending higher highs, higher lows, and then we had this controlled pullback, which was quite severe, but a pullback. So the current point of control area is at 5460, a breakout and a confirmed candle closing in an hourly or a 4-hourly time frame above that zone could potentially target further upside resistance towards 54.94, 55, 51 and 56.43, and these are based on the Napoli extensions or a fib extensions, if you want to call them. The other alternative is a sell-off into this buy zone here for anybody who is bullish. Around 54 would be a logical support. A loss of 54 could potentially open up the way for the retest of 53.61 followed by 53.40. A loss of 53.40 would pick up some stops and then we could see further selling, but that'll be quite concerning. S&P levels, yet again we had a nice move higher. This potentially does look like a head and shoulder intraday topping pattern, sell-off and so on. This is a significant support for you guys. Point of control area is at 212100. 200 period moving average falling support trend line, and also fib retracement from this swing low to swing high of 50%. A loss of 21 could potentially target 2098, 2093 and even 2083. The other alternative is quick and a swift move higher from this current support zone could potentially target further upside resistance towards 2110 followed by 2116 and 2119, 2120. We're looking at gold. Yet again, some people might see this as a inverse head and shoulder, but we need to see a breakout and a 4-hourly or at least hourly close above this 1225 for that to play out. Up until this point in time, this tend to be seen as a continuation bearish pattern, which is a rising wedge with a pivotal zone or a point of control zone at 1212. Rejection at that zone and a further move lower could potentially open up the way for the retest of 1205 followed by 12 followed by 1192, even 1180 on a downside. The other alternative is a rally into these two zones, 1218, 1220. Most of the people who are sitting in a bearish camp would probably be looking to short around that zone, with their stop losses being around 12.25. A swift move above 12.20 could potentially spike higher to pick up those stops around 12.25. The last thing that I want to talk about is crude, WTI US crude. This does appear to be coiling. Energy is building. We'll see an explosive move fairly soon in one direction or the other. We have loads of people sitting in a bearish camp calling for $20 oil or even $10 oil. Then on the other side, we have loads of people who are short, and they need to close their shorts. Therefore, they need to buy in order to reverse their current short exposure. Point of control is at 50. A loss of 50. And an hourly or 4-hourly candle closing below that zone could potentially target further downside support towards 49.50, 49. A loss of 49 level would be quite concerning, and then it would open up the way for the retest of fairly significant support at 48, and that will probably end up being a bearish outcome. The other opportunity is, as long as this 50 zone holds, or maybe even 49.50, potentially the price can move higher towards this 50, 82, 51.20 to challenge this falling resistance trend line, and that will be a third touch. Only a breakout, confirmed breakout in an hourly or 4-hourly time frame above that zone could potentially open up the way for the retest of 51.60, followed by 52.50. This was short and sweet. We covered loads of instruments in a short period of time. If you wish to join us at TraderCast, feel free. You have 2 weeks to try our services. And also there is a promo code attached. So stay safe and happy trading, and manage your risk for the next week.